And those trade tensions between the U.S. and China have some investors looking for safe havens from all of the recent stock market volatility. But are areas like gold and bonds, traditional safe havens, as safe as they once were? Hugh Johnson, Chairman and Chief Investment Officer of his own money management firm, Hugh Johnson Advisors, joins us now. Good to see you, Hugh.
Nice to be with you, Sue.
So a lot of people do look to the bond market perhaps as a safe haven, but we have record low interest rates. And you maintain that gold is not necessarily a safe haven either.
Yeah, the problem, of course, is there's an old expression in our business called, is that there are no solutions, there are only trade-offs. And so you could go to the bond market, money market mutual funds, or go all the way up to, say, a 30-year treasury. Your money might be safe, but the returns there are not very attractive or not very appealing, talking about 1.5 to, say, 2.5% at best. So that's a real problem. And then, of course, when you look at what we call a traditional safe haven like gold, it's not as though the price of gold doesn't also trade up and down, or there's volatility associated with it. And Sue, going into a bear market that might be accompanied by a recession, if that is the case, gold does serve as a good safe haven. It does outperform the market, but quite frankly, coming out of a bear market that's accompanied by a recession, there's no need, or nobody's looking for a safe haven, and the case for inflation has all been eliminated. So gold performs poorly under those conditions. So the point is, there's volatility associated with that traditional safe haven called gold.
There are sectors of the stock market, though, Hugh, where people have been going to find some refuge away from all the volatility. I think of utilities, I think of healthcare, I think of some of those industries that are not as affected by trade with China. But they've become, as we like to say, crowded trade. So how safe really are they right now?
That's right. Everybody's a little bit worried that that's been played too much. In other words, the traditional so-called defensive safe sectors, and you mentioned healthcare, you mentioned utilities. I would add consumer staples to that list.
Right.
They've had a real run to the upside, so you wonder if there's anything left. But the point is that there are, I hear from a lot of clients that they're very worried about the volatility. They can't sleep at night. And if you can't sleep at night, think about reducing your allocation to equities. If you can't sleep at night, start to shift towards safer sectors like utilities and consumer staples. And probably, Bill, the most important thing is to think about dividend strategies. Buy stocks with good dividends.
Hugh Johnson with Hugh Johnson Advisors. Thanks, Hugh.